despite during the day falling as much as 1.1%. I think the real turnaround came in the last hour of trade, where we did see the banks giving up the losses and closing more on neutral ground. So if we have a look at the top 20 stocks, we actually only saw 3 of those making gains today. They were Westfield, Suncorp Metway, as well as CBA, which finished slightly in the black. We have a look at the top 50 stocks. It was mostly property stocks which managed to gain there. In fact, property was the best performing sector. In this particular sector, there's 17 stocks, and we actually saw only one of those stocks declining today, and that was CHC. But the other property stocks doing well. If we have a look at some of the top performers there, we saw Commonwealth Property Trust, that was up by 3.8%. We also saw Mirvac gaining 3.5%, and we saw Dexus gaining 3.3%. Dexus was helped along by a UBS upgrade which came out. UBS putting a buy on the stock, raising it from neutral, also raising its 12-month target price by 6% to $1.14. So that helping Dexus shares out. But of course, these property stocks are also high yielding. If we have a look at the Commonwealth Property Trust, well, that particular one has a yield of 5.9%, Mirvac has the yield of 4%, and Dexus has the yield of 5.5%. So it does look like investors still perhaps looking for that yield. The other area doing well today was the consumer discretionary space. We saw stocks like Ainsworth up by more than 5% during the session. We also saw Seven West Media up by 2.8%, 10 shares gaining around about 1.9%. But on the flip side, Billabong, another tumble today, down a massive 11% on the market. So all in all, a pretty good session on the Aussie market, really helped along by those banking stocks as well as the property stocks.
Tonight, read the tea leaves for us.
Well, the market obviously believes that we're going to see a winding back in terms of quantitative easing. And of course, all that speculation is starting to be priced into the markets. We have a look at the US 10-year Treasury. We've actually seen yields up 50 basis points now since the beginning of May. So perhaps starting to price in the end of quantitative easing, or at least the winding back of QE. We have a look at the FOMC. That's going to be important for asset markets all around the world, especially currencies as well. And if we have a look at currencies at the moment, forecast for the Aussie dollar is still pretty bearish. We saw NAB coming out to say that they expect the Aussie dollar to be at 93 cents by the end of the year. We know that if we have a look at some of the other forecasts in the market, they're pretty bearish as well, and a record number of short positions in the Aussie. So that's really on the back of expectations that we are going to see quantitative easing, winding back, the US economy really starting to recover quite strongly, and the US dollar continuing to be quite stronger. So that is actually going to come to a test in the next 24 hours with those FOMC minutes, and no doubt the currency markets as well as the share markets and commodity markets watching that meeting very closely.
And what do you expect? I mean, the currency is generally always the first to react, Julia. The Aussie dollar, if we get some sort of rhetoric around tapering, do we see the Aussie dollar plummet?
If we do get rhetoric around tapering off, that would be good news for the US dollar and bad news for the Aussie currency. So as we see the Aussie currency weaken off, we'll probably see international flows being a factor once again in terms of the Aussie market. And that's probably a key factor in the reason why we have seen the banks pulling back, because when international investors tend to invest into the Australian share market, they really only tend to invest in a handful of stocks. They're the big 4 banks, BHP, Rio Tinto, and perhaps Newcrest Mining. So really, when we start to see international investors moving in and out of the market, we see an impact in terms of those key blue chips on our markets. So the Aussie dollar is going to be in focus if we do see a winding back, and I guess that's starting to already be priced into our currency, and we've seen quite a bit of volatility over the last week. We will see more weakness in the Aussie dollar and strengthening in the US currency.
Back Ruralco's bids. They also are in talks over Futuris. Quite a reaction on markets, though. Elders shares down about 22% in the end.
Well, Elders is really fighting for survival here, and that's reflected in the share price reaction that we saw today. The stock down by 22%. Now, the banks really have set a deadline of the 30th of September to sell these major assets by, but I guess in terms of this knockback, I would imagine that Elders would have the lenders' support in that particular move. Ruralco is the natural bidder of these assets, the Rural Services division, and that's because Ruralco owns a 12% stake in Elders, and really we haven't seen too much interest emerging for this services area. So if we have a look at this services division, it's probably worth around the $300 million mark. There were some reports that Ruralco was bidding more around the $250 million mark, which would have meant the lenders would have had to take a haircut. So it does look like it wasn't a good situation to have been in. Of course, we know that the other business which is on the auction block at the moment is Futuris, and we'll probably see a result there pretty soon. The book value of that particular business is about $75 million, so we'll probably see a sale price around that amount. But if we have a look at Elders, really what we are seeing is a wrapping up and a winding back of its business. It's still probably working with its lenders in this regard, but of course the news is a negative one because the market would have liked to have seen a good price for Ruralco and no doubt for the services division, and no doubt its shareholders would have as well. So Elders shares down by a massive 22.2% today.